Ain't it a great day? Ain't it a great day? Ain't it a great day? Ain't it a great day?
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is August 4th, 2025. And most people are misreading this Bitcoin move. I'm going to talk about why that is. I'm going to talk about why Bitcoin yesterday and earlier today has made it very clear what its next move is likely to be. I'm also going to talk about how we know all of this, looking at the Bitcoin chart, looking at the TOTAL3, looking at the Bitcoin dominance chart. All right? So if that all sounds interesting to you, then watch until the very end. Hope everyone's having a great day. Let's get into it. So, yesterday, I was discussing how Bitcoin was at a point of decision, right? We were at this level right here, and I said if we were going to go up, we would have to do X, Y, and Z. We would have to reclaim previous resistance as new support. And then it would be very clear that we were bullish. But if we didn't do that, we would likely break down to the levels that we discussed previously, right? To our next logical next logical support level of 100K. And I'm here to tell you that Bitcoin is very clear in its price action as to what it's likely to do next. Most people are misreading this price action. Why? I would say the number one reason is that they're too focused in on the small time frames. This is probably the number one error that beginner analysts and traders make. Okay, here's what they do. They zoom in. If you're lucky, they'll be on the hourly time frame. Usually it's on the 15-minute time frame or even the 5-minute time frame I've seen. And they'll say, "Whoa, look at this. It's so bullish. Oh my god, we're bullish. We're going to explode. I'm picking out my, Lambo already. Like, we're going to be so rich." That is exactly what not to do, right? So I think most of us can help ourselves first and foremost by zooming out, okay? This means nothing. Not every green candle is bullish. Not every red candle is bearish. Let's start with that. Context matters. So zooming back out into the 4-hourly time frame, still 4 hours per candle is still intraday. It's still not a high time frame, but it's not too small, and you can still glean some context. Context is important. So by zooming in to the small time frames, most people are ignoring the trend and the counter trend. You always, when you're in a trending market, first, let me say this. Trending markets are supposed to be easy. Where traders go to die is in consolidation. That's when the difficulty is on 100. And I don't care what style you're doing. If you're scalping, if you're swinging, if you're position trading, consolidating markets are very difficult. Actually, it's easiest for the scalpers, the small time frame traders. But still, consolidating markets are unpredictable. They're where traders go to die. They're where accounts go to die, right? Many blown accounts have been blown in consolidation, right? In chop, we call it in trading. But when you're trending, that's when it's supposed to get easy. But it's not easy if you can't recognize a trend. What is a trend? So Elliott wave analysis offers probably the most robust explanation for what a trend is technically, figuratively, how to recognize it, what the invalidations are, so on and so forth. But you don't necessarily need to be a master Elliottian to recognize that this right here was the trend. in the beginning of the month. We went down. And this right here looks like a counter to that trend. Ergo, a counter trend. You do not want to mistake the counter trend for the trend. The counter trend is normal. The counter trend is to be expected in a trend. You never go in a straight line. You're always expecting to go in trend, counter trend, trend, counter trend, trend, counter trend. But you're making your money in the trend. The trend is your friend until the end. So you're not minding the counter trend. What Elliott wave also tells you is that the first counter trend is actually the most drastic or the largest of the counter trends. That counter trend goes as much as 62% back from what you did in the trend. So basically it 62 up to 62% retracement of the trend that you just put in. It's called wave 2. And Elliott wave also tells us that the counter trend, the initial counter trend, so wave 2 after wave 1, tends to take the same amount of time, more or less, as the first wave. So if we look at what happened in Bitcoin on the hourly time frame, and let's assume if we came back all the way up here, we didn't stop here, we wicked up here, maybe we're dealing with a trend counter trend situation. So what would we do? We would take our Fibonacci retracement tool from the top to the bottom. Okay, and Elliott wave also instructs you on how to read the tops and bottoms of trends. So where do you pull your fibs from? Okay, it's not necessarily the highest point or the lowest point. It's where the trend finishes and where the consolidation or the counter trend starts. So it would be right there, top and the bottom. And basically the technical invalidation for the counter trend is a clean break of the 0618, which happens to be coincident with the midline of this 19-day channel. Furthermore, if you look in terms of timing, the trend took us 2 days and 2 hours. The counter trend thus far has taken 2 days and 2 hours. If we get a rejection and a move down or a resumption of the trend now, it's further evidence that we may be in a strong downtrend. All right? So this is important to table as a plausible sort of a plausible trade thesis for what's going on the small time frame. I remember saying, look, we're in a channel, the 19-day channel. We broke down below the bottom of the channel. And if we're bearish, what we're going to do is retest the midline, break down from that, then retest the bottom of the channel and break down from that. And I said that is what you should expect in terms of price losing the bounds of a channel, breaking down from a channel. That's all true. But what happened? Well, we did something that resembled, let's zoom in. We did something that resembled a midline retest right here, yeah? Right here. And we came down below the bottom of the channel, and we came up and we broke back above it. Oh my God, that thesis is invalidated. No, it's not. This is a really important point I'm going to make here. You can be wrong, you can be right and still be wrong as to how exactly things happen. You have to know when to invalidate your trade thesis. So is my trade thesis invalid because we broke back to the midline? No. It just means I was too early on calling this being the midline retest. And this is more likely than not the midline retest. It's art and not science. There's some science to it, but it's art. You have to know when to be firm in your invalidations and say, well, that's not necessarily an invalidation. It is in certain contexts. This is where your discernment comes into play. You have to figure out, okay, now if we're bullish, we're going to take this very important resistance, the heart line, the midline of the channel, and we're going to break above it. Until we do that, we're not bullish. That is an invalidation for me. But finding resistance at the midline is further support for my bearish thesis. And it just means that my midline retest happened a little slower than I thought. And it also means that my next move is likely to be the bottom retest. So I'm very much likely to see a 110 Bitcoin before another counter trend on a smaller time frame, to a smaller degree in my Elliott wave count. I hope this doesn't go over everybody's head. I think most of you guys get this stuff. You know, just balance of how many messages I get from people panicking or people saying, oh my God, you were wrong. Most of you guys are just, you know, figuring it out, are getting it. It's not that complicated. Some of you still don't get it. It's not about whether it's a green candle, it's a red candle. It's the context of the green candle, the context of a red candle. A green candle into small time frame resistance might as well just be a red candle. It's not bullish. A red candle at support, especially high time frame support, you might as well just consider it green. Right? So this is where you really want to take your trading and your reading of charts to another level. Don't fall into the trap that most of crypto Twitter falls into by falling in love with a simple color, forgetting the context of things. There's nothing bullish about Bitcoin at this level. And look, our 4-hourly stochastic momentum indicator is still completely overbought. This is not bullish. Furthermore, if you just look at the character of these candles, big wicks to the top means I don't like it here. I want to go lower. Big wicks to the top means there's a lot of selling pressure going on, and I'm not comfortable staying at these levels. And when it comes time and I get the cue to go down, I'm going to go down violently. That's what that means. Read the price action. It's telling you everything you need to know. The big wicks to the top are not good for bullish continuation. You call that, I think, a spinning top or a doji, or I think it's a spinning top, yeah? In any case, moving down into the hourly time frame, you can see the same thing. You know, it is, this region right here is characterized by chop. You're basically chopping up into these levels with very little, whoops, what am I doing? You're chopping up into these levels with very little bullish momentum, with very, you know, it's very like, look at all these candles. This looks horrible. This is not what you want to see in a strong bullish reclamation. And we talked about that in the previous episode. If you're going to reclaim, like, you have to also, I'm assuming this is clear because in your fundamental understanding of price action, you know what a reversal looks like. You know, you're comfortable with the anatomy of a reversal. You're comfortable with the anatomy of a bullish trend, a trending market, what it looks like. There's nothing trending about this. Everything about this is corrective. Corrective price action looks, it's based like this. It has a corrective base. Corrective price action chops and is uncertain. Corrective price action is slow. It is indeterminate. It kind of takes a position, but it doesn't really, well, I guess I'll go up. That's corrective price action. If it was a character, it would be like, I guess. shucks, do I have to? All right, fine. And it'll slowly go about its business. And then impulsive price action is get out of my way. Move, 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 move. Ah! Right? So you have to be comfortable understanding the nature of different types of price action. This is not it. You should never get excited about this, trading this up or down. This is always where you plan. The correction is where you plan, because you want to use the correction to identify the trend, you know, in contradistinction to the trend. Because if you're getting a correction, somewhere there's a trend. Identify the trend, get in that. That's the money maker. All right, so that's Bitcoin. Nothing bullish at these levels. And again, kudos to most of you who do not overreact to, oh my god, this happened, that happened. Like, the high time frame analysis is playing out, and that's the most likely, most probable analysis, or most probable outcome. That tends to play out. The small time frame analyses, they're here and there, hit or miss, not that important. Keep the main thing the main thing. The main thing is high time frame analysis. It's bearish. Nothing contradicts that on the small time frames. So you stay the course. You continue to plan for the higher time frame analysis outcome. That's it. And then you just look at the smaller time frame to pay attention to see if everything's going according to plan. It doesn't have to perfectly match how you think it's going to happen, right? So I thought that, for instance, this was the midline retest. Apparently it wasn't. Apparently this is the midline retest. And that's fine with me. I'm fine being wrong there. That being wrong does not equate to my losing a trade. Very important. Very important. You have to give yourself a chance. I remember back when I started trading, I would write in a trading journal, and I remember one of the days writing in big bold letters, give yourself a chance. What does that mean? To me, it meant stop making your margins so small. Stop being overly confident in your small time frame analysis. You're getting good at analyzing charts, but it doesn't necessarily mean that it's going to play out 100% how you think it's going to play out. Don't be right on the high time frame and then still lose the trade because you're arrogant and think you know 100% how it's going to play out on the small time frame. You have a smaller margin for how it's going to play out on the small time frame. Respect the capriciousness of the market and give yourself a chance. And that basically meant that my margins were larger when I was trading leverage. I didn't go 50x, 100x. I gave myself some room to be wrong as to how the market played out. Very, very, very important. Okay, so that's Bitcoin. We can see it on the charts that the move down is imminent and more likely than not. Let's look at our total 3. What are we seeing here? We said yesterday that we could channel this price action, and until which time you broke the channel, you should continue your channel. Until which time the channel breaks, the channel's a trend, you're still in your trend. Here's a trend right here, and I've channeled it between 2 dotted lines. Even though we go and wick above the resistance, a wick does not equate to a reversal. That is not a break. Expect it to keep going, and let the market tell you when it breaks. That's your initial break of structure. Then you know to get out of the trend. If the trend's going against you, or if the break's going against you, you're gonna have time. This is not, you don't have to rush. You don't have to freak out. the break of the channel is called the initial break for a reason, because it takes time and a few moves, 2 degrees of AB basing and a pivot, before the trend changes. A lot of people do not know what the anatomy of a reversal looks like, or what it entails, what needs to go in to reversing trends. So as soon as they see any kind of green in a red trend, they're bidding. Same with, you know, the other way. Again, go back to your fundamentals. What's a trend reversal look like? Go back test it. On a high time frame, small time frame, it should be the same. If you're doing Wyckoff, it's a Wyckoff accumulation. If you're doing Elliott wave analysis, it's AB based theory. Be comfortable with what that looks like. Then you won't get freaked out. You'll just know that you can ride trends down or up. This is what winning traders do. All right, so far we're fine. We're still in our trend. We're at the top resistance of the trend, but that doesn't mean the trend's broken, even if it's wicked above. Okay, we don't mind wicks. You're gonna continue the trend, right? The trend is down. The local trend is down. So that's the total 3. Now let's look at Bitcoin dominance. Bitcoin dominance, we were saying, was likely to reverse course and hit our 64% target. We have yet to reverse course. We're actually, we went down from where I said we were likely to reverse course right here. We came down. Is that invalidated? No. All right. Look, our stochastic momentum indicator, stochastic RSI momentum indicators still bottomed out. I'm not saying that you should go off of that, because it's an indicator. It has its blind spots. It's going to be wrong from time to time. But you should, again, be confident and comfortable in your high time frame analysis. Let your high time frame analysis play out. Give your high time frame analysis a chance to play out. On the high time frame, you're dealing with a high time frame channel. A channel of 180 days. You went from up to down and up to down. You're at the base of the channel. If the channel's to break down, you must retest that midline. Just relax. That midline is likely to be retested. That's the high probability play. Play the probabilities. That's all you're doing here. In trading, in poker, in whatever, you know, sort of chance game of chance, activity of chance, you want to play the probabilities. The probabilities say 64% is your target. You shouldn't expect this breakdown. That is a low probability affair. That's a low probability outcome. The high probability outcome is still likely to play out, not only on the higher time frames, but also on the smaller intraday time frames. Let it play out. Don't worry so much as to how exactly it's going to play out, because that is, you're less likely to nail the how than the what. Just hands off the how. There are so many permutations and combinations and, you know, different ways that can play out. Just let price action deal with itself, but you focus on the high probability. That's the target. Let it play out. It's still likely to play out, in my opinion. And I believe that this right here, this is the counter trend to this trend. So I'm still looking for this move. If I'm still looking for that move, that is a corroboration, that is a confirmation of my high time frame analysis in Bitcoin and in the total 3. Guys, that's it from me. Let me say before I end the video, for those of you taking part in the bonus, the BTCC bonus, my new trading partner, right? And what's the bonus? I'm referring to BTCC, my new trading partner, is giving back 10% on any deposits made by any first time deposits made on the platform. So if you're new to BTCC and you make a first deposit, you're getting 10%. You need to make a minimum deposit of 500 USDT. It doesn't have to be in USDT. It could be equivalent of 500 USDT. So it could be 500, the equivalent of 500 USDT in Fartcoin, the equivalent in 500 USDT in Cardano, the equivalent in 500 USDT in USDC. It doesn't matter. All you need to do is put it on the exchange, make a single trade, and don't remove that deposit until you get your bonus. Because if you do, you're likely not to get your bonus. Wait at most a week, get your bonus, then you can do whatever you want. So that is the thing. Don't worry about having to put USDT specifically on the exchange to fulfill the requirements for the bonus. So again, it's 10%, and the max you can get back is 10,000 if you deposited the equivalent of the equivalent of 100K. Like I said before, am going to take advantage of it as well. So I mean, it's a good bonus, and it's a serious exchange. They're good partners, and I would feel comfortable putting and parking a percentage of my portfolio on BTCC. Never been hacked. They have a 13-year track record, the longest running exchange in all of crypto. So that the details for that, the link for that rather, is in the pinned comment below. Like, share, and subscribe. Consider tipping me, Venmo, Litecoin, Cash App. Consider my crypto portfolio mentorship and consultation service. Also can be signed up for at the pinned comment below. And that's it. Take care. I'll see you later. Bye. My prevalent time slot, I vocalize, too deep to localize, even when I'm right on the surface. You act surprised how I work this, but I can't lie. Many a good alibi. I'll catch you later.
Visions are vividly enhanced with emphasis and amethyst to develop morale advantages which help us manifest magnanimous. Revive your vitals like evangelists. So listen when you're dealing with people who be revealing premonitions with precision. At least that's what I'm aiming at for now. I speak the language of the world, meandering throughout the crowd. Used to feel safe to say anything, but now it's a risk. It's hard for me to let go when all I can do is reminisce. Gone like the wind, here's where I begin. Should I smile or should I grin what's happening? Gone like the wind, here's where I begin.